So you've all heard of Ethereum. You've seen the price charts that look like an absolute roller coaster. But I'm going to tell you what most people, even some who already own it, get completely wrong. If you think Ethereum is just another crypto, you're missing the multi-trillion-dollar picture that Wall Street is just starting to see now. And by the end of this video, you won't see Ethereum as a coin. You'll see it as a revolutionary technology that is actively reshaping our world today. The price goes up, the price goes down. The news talks about it in the same breath as Bitcoin, usually calling it digital silver to Bitcoin's digital gold. It's the second biggest crypto, and for most people, that's where the story ends. They buy it, they hope the numbers go up, and treat it just like a volatile tech stock. And hey, that's totally understandable, but it's also a massive misunderstanding. It's like looking at the invention of the internet and seeing it as just a new way to send letters, completely missing that it would soon host entire economies, new forms of media, and a total reinvention of global communication. Thinking of Ethereum as just digital money is the single biggest mistake an investor can make. Why? Because you fundamentally misjudge what you actually own. You're looking at the fuel, but you're missing the world-changing engine it's designed to power. And that engine is where the real story is. So what if I told you Ethereum isn't just a currency, but a global decentralized computer that anyone can build on? Forget money for a second. Think of it as an operating system like Windows or Mac OS, but instead of running on your laptop, it runs on thousands of computers across the globe. And no single company, not even a government, controls it. It's its own platform. The magic behind this is smart contracts. The name sounds techie, but the idea is dead simple. A smart contract is just a real-world contract written in code that executes itself automatically. The classic example is like a vending machine. It has hard-coded rules. If you put in $1, then it gives you a drink. No cashier, no delays, and no debates. The machine enforces the agreement. Smart contracts do exactly the same for digital value. They let developers build applications with what-if logic that runs exactly as programmed, with no middlemen needed. The global computer that runs all of these smart contracts is called Ethereum Virtual Machine, or EVM. The EVM is the shared brain of the whole operation, processing everything from a simple payment to a complex financial machine. First, decentralized finance, DeFi. This is the project to rebuild our entire financial system, from lending, borrowing, trading, insurance, without banks. With smart contracts on Ethereum, you can borrow money and earn daily interest from others, all governed by transparent code instead of a banker's ledger. Platforms like Aave and Uniswap aren't just companies, they're open source protocols on Ethereum that let millions of people trade and lend permissionlessly. Second, non-fungible tokens, NFTs. The mainstream story was about overpriced cartoons, but that's just like saying the internet is just for cats. An NFT is not the image, it's the technology of provable, programmable digital ownership. For the first time, a smart contract can assign unique, undeniable ownership of a digital or physical item. Today it's art, tomorrow that same tech can be the deed for your house, your university degree, or even your passport. Third, decentralized applications, dApps. This is the app store for the new decentralized internet, often called Web3. Imagine social media where you own your data, not the corporation. Imagine games where the items that you earn are actually yours to sell on an open marketplace. These aren't just ideas, these are being built on Ethereum right now. So, where does the ETH coin actually fit in? Ethereum is the fuel for this global computer. Every single thing that happens on the network, every trade, every NFT sale, every dApp interaction requires a small payment in Ethereum. This fee, called gas, pays the computers that secure the network. This creates a powerful built-in demand for ETH. The more people that use Ethereum, the more fuel they need. Okay, so why does this actually matter for your portfolio? Because when you buy ETH, you're not just buying a coin, you're buying a piece of the foundational layer of the new internet. You're getting a stake in a global decentralized computer that's becoming the settlement layer for a new generation of finance and tech. The investment thesis for Ethereum is built on some powerful ideas. First, you've got the network effect. Value in tech tends to flow to the platform with the most users and developers. It's why we all use the same few social media sites. Ethereum has by far the biggest and most active ecosystem in the blockchain world, dominating with over 63% of the capital in DeFi applications, while competitors like Solana are still growing. Ethereum's gravitational pull keeps it the default place for innovation. Second, the evolution of the asset itself. The major merge upgrade shifted Ethereum to a proof of stake system. This drastically cuts its energy use, but more importantly, it's changed Ethereum's economics. Now a portion of transaction fees are burnt, which basically means permanently deleted. During times of high network use, more Ethereum can be burnt than is created. While this doesn't actually make it consistently deflationary, it introduces a dynamic where the asset can become more scarce as its usage grows. a powerful combination for a productive asset. Third, the scalability roadmap. A fair knock on Ethereum has been its high fees and slow speeds, but that's a symptom of success. It's like complaining about traffic in a city that everyone wants to be in. The solution isn't to leave the city, it's to build better roads, and that's happening right now with Layer 2 scaling solutions and major upgrades like the recent Pectra upgrade, which makes the network more efficient, user-friendly, and scalable. These act like express lanes processing thousands of transactions cheaply before settling them securely on the main chain. This solves the scalability problem without having to give up the decentralization that makes Ethereum valuable. Finally, the next frontier, real-world assets, RWAs. This is about putting traditional assets like stocks, bonds, and real estate onto the blockchain. Financial giants like BlackRock and Franklin Templeton are already making moves here. This market is measured in the hundreds of trillions of dollars. As this value comes on chain, it will need a secure decentralized home, and Ethereum is the leading candidate for this. Of course, no investment comes risk-free. Ethereum faces fierce competition, regulatory hurdles, and the wild volatility of the crypto market. We started by looking at a squiggly line on a price chart, but now you can see the whole iceberg. Ethereum isn't just a cryptocurrency. It's a decentralized global computer, an operating system for the new financial world, and the foundation of the new internet. When you get that every DeFi app, every NFT, and every technology being built adds to the demand for this platform, the investment case becomes much bigger than day-to-day price swings. Some analysts looking at these fundamentals have optimistic price targets in the range of $6,500 to $7,500 for Ethereum by the end of 2025. Understanding that Ethereum is a programmable platform is the key to seeing its true potential. So before you invest, make sure you're not just buying the currency, but you're buying into the revolution it's powering. Guys, if this video helped you see the bigger picture and really understand why Ethereum is so important, do me a favor and hit the subscribe button. We're also going to be exploring more of these world-changing technologies in the weeks to come, and I highly suggest that you check out the last video that I did on XRP, as this is a revolutionary project that you need to take seriously. I'll see you guys in the next video.